Welcome to the weekly market updates by Softlogic Stockbrokers. Colombo Bourse continued to slip for the fourth consecutive day to early January low, whilst ASPI dropping over 600 points from the all-time high of 13,462.4. All share price index declined by 508.5 points to close at 12,863.1, and the S&P SL20 index also fell by 224.4 points to close the week at 4,680 points. Broader market total turnover for the week stood over Rs 43.8 billion, mainly dominated by a foreign crossing of John Keel's holdings amounted to Rs 12.9 billion on Monday. 12-month average daily turnover of Rs 4,760.3 million was recorded, whilst the total volume traded for the week was 991 million shares. Capital goods, insurance, food and beverage, and diversified financials mostly contributed to week's turnover. November 2021 records the highest monthly export value in history. Exports grew by 54.6% year-on-year. Industrial exports rose by 56.6% year-on-year, stirred by textile and apparel exports, food, beverages and tobacco, petroleum products, and higher rubber products exports. Export earnings from agricultural goods increased by 46.9% year-on-year, mainly driven by tea, coconut, spice and higher seafood exports. Imports up by 27.5% year-on-year. The surge in intermediate goods up by 24.3% year-on-year were mainly owing to surge in textiles and textile articles, plastics and articles thereof, and other intermediate goods. Fuel imports increased by 78% year-on-year in November 2021, whilst refined petroleum soared by 21.46% year-on-year. Imports on consumer goods increased by 19.7% year-on-year, and investment goods too rose by 40.2% year-on-year in November 2021. The trade deficit narrowed to reach $553 million, whilst workers' remittances also recorded a decline of 55.6% year-on-year to $271 million in November 2021. JKH posts very strong 3Q. Group 3Q revenue up by 53% year-on-year to Rs 53.8 billion, by 60% to Rs 142 billion for 9 months. Earnings before interest, taxes, depreciation and amortization up by 126% to Rs 9.53 billion in 3Q, by 148% to Rs 20.7 billion for 9 months. Export reports net profit of 23 billion in 3Q. The group recorded a revenue of Rs 204.9 billion, up by 254%, a gross profit of Rs 38.7 billion, up by 299%, and a profit after tax of Rs 23 billion, up by 405% for the quarter ending 31st December 2021. As of 9 months ending revenue of Rs 452 billion, up by 216%, and a profit after tax of Rs 41.4 billion, up by 208%. CIC Holdings up by 9-month profit by 14% to 3.2 billion rupees. Despite facing numerous challenges, CIC Holdings ended the third quarter with a turnover of 29.9 billion in the first 9 months, which was an increase of 6% from a year earlier. In the 3Q, revenue grew by only 1.5% to Rs 11.3 billion, whilst profits after tax declined by 2.87% to Rs 1.8 billion. LIOC 3Q pre-tax profit tops Rs 1 billion mark. Revenue in 3Q of FY22 rose by 23 billion rupees from Rs 16.5 billion a year ago, whilst operating profit increased by Rs 626.5 billion to Rs 980.4 billion rupees. LIOC pre-tax profit amounted to Rs 1.3 billion, up from Rs 810 million in the corresponding quarter of FY21. After-tax profit for the quarter was Rs 889.7 million, as against Rs 687 million a year ago. SLTDA streamlines and fast-tracks via single application process by signing 8 MOUs. Sri Lanka seeks $175 MLN for exclusive Galle tourist port. Sri Lanka unlikely to achieve 100,000 monthly target as Omicron fears grow, tourism minister said. These are the crossings for the week. Company news and highlights. Standard Chartered grants $225 million senior secured syndicated term loan to refinance Cinnamon Life. Swarnmal Financial to be deposited with sale of 425 million rupees assets to SMB leasing. Sri Lanka Sierra Cables downgraded to A+ on raw material imports. Heller Apparel Holdings Rs 4 billion IPO sets new milestones, oversubscribed by 5.4 times.
Moving on to the technicals, the all-share price index pulled back heavily, erasing a large amount of its gains recorded back in early January. On our previous weekly recaps, we did mention that investors must take a cautionary approach with regards to the overall market, and we continue to stand by what we said. Looking at the chart, this week records the single largest week loss since mid last year, and we expect to follow through over the next week as well. The key levels that we are watching for is between 12,000 and 12,200 points, where multiple support levels align with each other. Bearing all of this in mind, heading on to next week, the overall price action in our opinion will most likely favor the conservative investors.